So hello everyone, we're gonna start in 5 minutes. So let's give some space to people to join because it is important, a little bit important Zoom call. So we're gonna give some space to people to join. Okay. So we're gonna start in 2-3 minutes at maximum waiting time. So let's listen to some Algerian music during the time, okay? So everyone, hello everyone. Yeah, I'm from Algeria. So everyone, do you see my screen and hear my voice clearly? So I want to see yes in the chat. So you see my screen clearly and hear my voice again. So everyone, yeah. So 2 minutes and we're gonna start.
Yeah.
Okay. So when we start, everyone, please mute your mic. So we're gonna start to explain and we don't need noises, okay? So hello everyone, it's Connor here today with this public Zoom call. So we're gonna explain a new technique that like you see in the Discord and in Instagram and the members in the free Telegram channel. So we're gonna talk about a new technique that will help people, especially those don't have time to trade or those don't have time to sit on a desk and keep watching the chart. So you don't need low time frame confirmation. You don't need to drop to the 1 minute or 2 minutes to find a change of character and look for extra confirmations. It's totally from higher time frame execution. Your minimum time frame is 15 minutes. And if you have a premium trading view, you can scroll in time frames, for example, 15, 16, 20. Okay. So, but it's all based on a higher time frame. So 15 minutes, it's enough, or I can consider it as a higher time frame. Okay. So first of all, in this Zoom call, we're gonna talk about totally about education. So we don't have a weekly breakdown or weekly watch list. So this will be in the private Discord for tomorrow for my members, private Discord members. We're gonna talk about this tomorrow. I will send the watch list tomorrow in a new Zoom call. So for this Zoom call, we're gonna only talk about this technique. I think this Zoom call will take about 1 till 2 hours. Maybe we're gonna send the link again. So stay with us till the end, because there is a high value education you're gonna get today. So we're gonna start with the external, because this strategy based in external and internal liquidity and the different form of liquidity. So we're gonna talk about it quickly, because we already have some videos about classic liquidity. And we have the confirmation candle, and we have the confirmation candle. And the fourth point, we're going to talk about the tips and tricks, how to let this strategy go smoothly with you. And we have the backtest. So we're going to analyze again this price action here on EuroCAD. So first of all, we're going to talk about the idea of external and internal liquidity. So like you know, a lot of mentors explain that in YouTube about external liquidity. So in how we define the external liquidity. So the external liquidity by definition is the swing highs and the swing low in the extreme of the trend. For example, price move like this way, higher highs and lower low and higher low and then lower low. So this point is an external liquidity, okay? And about the internal liquidity, a lot of mentors define the internal liquidity as the fair value gaps. So the fair value gap, it's the internal liquidity. So it's a form of range, because the fair value gap, it's a range. So this is why we call it internal range liquidity, okay? So here, for example, uh, in this schematic we have here, starting from this point, okay? We're gonna start from this point. We have here our first external liquidity, okay? So we have this move, and price at this point took this external liquidity, okay? And now price retracing all the way to take or tap into internal range liquidity. It's our fair value gap. Here at this point, price take the internal liquidity and then targeting the next external liquidity. So this low that took liquidity from previous external liquidity will be our future liquidity or our future external liquidity, okay? At this point, everything is clear, okay? I want to see members that join this call. I want them to be active with me in the chat, okay? In every point I explain, to make things clear, okay? At this point, so price move from internal to external and from external to internal. This is what you need to understand, that price move from internal to external and from external to internal liquidity. So in the way, so our strategy based on this phase, we're gonna depend on this phase, okay? Like you know, price move in two forms: expansion, retracement, and then expansion again. So we will not take entries in so this depends on you. You can take external, you can take expansion trades in the expansion and target an external liquidity, but this technique, you need to find a retracement move, okay, to take multiple entries, okay, and scale till price reach the internal liquidity, okay? So this is the first condition. So we have now our plan to use this technique. So first of all, you need to know or to identify where price need to go. So by finding the external liquidity and the internal liquidity. When you find the external liquidity, wait till price take this external liquidity, wait till price take the external liquidity, and then try to find entries and scale into this move, okay? So we have price should be in the way to target the internal liquidity, and this will happen only after taking the external liquidity, okay? So usually this will be a retracement move, like usual. Like we said here, after taking external liquidity, we need to see a retracement move till we reach the internal liquidity. So inside this move, use the different form of liquidity to find an entry after the swipe of liquidity. So now we're gonna talk about the different form of liquidity. In my last YouTube video, I talked about the previous day highs and the previous day lows as the easiest or as the easiest point of liquidity that market will target. Okay, so on structural perspective, we know that inside this move here, we have here, it's like a small trend. So this is our downtrend, the big trend, and inside this one, we have a small trend, okay? So you need to know what is the different form of liquidity inside this small trend, okay? And use it to scale into a trades till you reach this point, okay? So one of the most form of liquidity we gonna use inside this small trend is the previous day highs and lows, okay? So, and the inducement liquidity, okay? So there is two form of liquidity, and like usual, the classic liquidity trend lines and support and resistance levels, and those retail traders, retail liquidity, okay? So you already know about it as a smart money traders, okay? So scale into this zigzag move. So usually this will be a zigzag move up and down until we reach this point. And you can take long and short positions, but it's safer to take only trades with the small trend, not against. So we have this trend. For example, we are into a big trend. We are bearish in big trend. And in this small trend, of course, we're going to be bullish. So you need to look for long positions. Those long positions is safer, okay? And of course, you can take short positions, but safer entries will be the long positions, okay? Don't look for high risk to reward. Don't look for high RR, okay? And don't be greedy, okay? And now we're gonna talk about the entry criteria. About entry criteria, so we have, first of all, no swipe of liquidity, no entry. If you don't have a swipe of liquidity from external and even from our small trend, if you don't have a swipe liquidity inside this small trend, don't look for entry. If you don't have confirmation candle, no entry. So we're gonna talk about the confirmation candle later, okay? About the target, so we have to take a trade, we have just 3 simple rules. You need to stick to these simple rules to take the best entry. About the target, first form of liquidity or our next form of liquidity, it's our target or the next fair value gap. So now we're going to talk about the confirmation candles. There is 2 confirmation candles, and then we're going to talk about, we're going to go to take an example in the real chart, okay? So about our confirmation, there is 2 candles we're going to look for. The first candle is engulfing candle. So you know the engulfing candle. So we have, for example, here, this candle. Okay. I'm bad in drawing, but let me draw it, try to draw it properly. Okay. And we're going to find another candle, bigger one. So this one engulfed the previous candle. Okay. So after seeing this, sorry. So this is the engulfing candle. You already know what is the engulfing candle, okay? So this is a confirmation candle. You're gonna take your trade, for example, from this engulfing candle as a market execution, okay? And the second form of liquidity is the reversal candle. We have the doji reversal candle. You already know what is the doji candle. It's a candle with a long wick to the downside. If you look for a long position, or the opposite if you look for a short position. Okay, so this is for short and this is for long. Okay, so these are our confirmation candles. Okay, so now let's go to see our example from live chart, and we're gonna explain, you're gonna understand more in the live chart. Okay, so we're gonna delete all draws here and start again. Okay, so let me do it properly. Okay, so sorry. Okay, so let's delete all this and start over again. Okay, okay, so let's use the replay mode and come back all the way here. Let's move to the higher time frames. Okay, so first of all, let me do this one. First of all, we're gonna to define our external liquidity as a first step. We need to find our external liquidity. So here it's clear double bottom. So this will be our external liquidity. Okay. So everyone, you hear me clearly, okay? I don't want you to miss what I say, okay? So this is our external liquidity, okay? This is the first thing we need to find, okay? So the second thing, we already know that the price after taking this external liquidity will retrace to take internal liquidity. So we need to find our internal liquidity. So we have this, our fair value gap, that considered as external liquidity. Okay, and we need to find our supply zones, that price or that we gonna take an entry from it. Okay, so this candle will be our supply zone. Okay, and maybe we can refine it. Okay, so this one, our candle clear with no ugly wicks. It's very, very, very nice with a swipe of liquidity before. So this will give more uh, confidence to our zone. And we have this zone in the extreme, also called be our zone to take our trade from. So we still have some tiny fair value gap as internal liquidity. Okay. So now we know that the price need to retrace from this point all the way to this point, and then after taking the internal liquidity, continue and expansion to the downside. So the move inside this line here will need to be like this way, okay? And then we're gonna see expansion with strong momentum to the downside. So this is our expectation. So we have here also inducement liquidity. So for those who don't know what is the inducement liquidity, it's just a liquidity close to the order block. So we have here Asia session, and you can, if we go, for example, to the daily. So this candle here, do you see this candle from this point to this point? So the low of this candle already taken out. So the previous day low got taken out, but the previous day high didn't taken out. Okay. So this candle, it's a day. This candle represents a day. So we have the high. Do you see this high of this candle? It's the high that didn't taken out. So this will be a liquidity also. And of course, we have the Asia session that didn't taken out, the New York session, and the London session. I forgot to say something. You need to remember that the highs and the lows of sessions are also a point of liquidity. So for those who don't understand the liquidity clearly, please go to my YouTube channel, watch all liquidity videos. You're gonna understand it clearly. All my YouTube videos, the information there, you will not find it, maybe even in paid mentorships, you will not find a valuable information like that I post in my YouTube channel, because I believe that the knowledge need to be free for everyone. Okay, so now we need to find a trade from this, starting to find trades from this point. Okay, so first of all, we're gonna drop to some lower time frame. We get to identify the previous day high and low. You can use this indicator. Will make this easy for you. Previous OHLC by nephew sum. Okay, you can use the indicator. So first of all, we took the external liquidity, but we still have the previous day low. So now we are in this point of the market of our plan. Okay, what's the plan? Okay, let me get the plan. Okay, let's get it here. So we are here. Wait till price take external liquidity. We are in third point. Price should be inside. We are inside. Okay, we are in the fourth point. Inside the move, use the different form of liquidity to find an entry. Okay, so now we're gonna use different form of liquidity, the classic liquidity and previous day high and lows liquidity and all those stuff. So we have here clear liquidity generated above, and we have the previous day low liquidity. So after the swipe of liquidity, we're gonna look for entry. Sorry, I'm gonna take it. Okay. By nephew sum. So for those who ask about the indicator, this one, this code recorded, you can check it later. Okay. Okay. So we're gonna wait till we took the liquidity. We are in the higher time frame in the 1 hour. So after this swipe of liquidity, you need to look for, like we said, a candle of confirmation. We talked about two forms of candles. We're gonna look for one of them. If you have a premium trading view, you can scroll in time frames, multiple time frames to find the best candle. If you don't have, stick to the usual time frames, the 1 hour, 45 and 13-minute and the 15-minute. Maybe I don't remember if we have the 10-minute in the basic, but if you have, you can drop as a minimum time frame to the 10 minutes just to check. Okay, so now let's go, for example, the 1 hour. Let me check to multiple time frames. Okay, not this one. Okay, so this one here, it's a nice push to the upside, so you can take a trade from this one, but it's not engulfing very well because this one is higher than this one. Let's go to 13 minutes. Okay, so let me talk about another point. So we have here, do you see this low here? So price after broke through this low that considered as a point of liquidity and reverse and close above it in the same candle. So this technique already retail traders know about, but they don't understand it. They don't understand the logic behind. So they call this one here as let me check. 4 and 3, 6. Anyway, they call this one here the SFP. They call it SFP, swing failure pattern. So they consider this as a swing low and this swing failure pattern, but it's not a swing failure pattern on anything. It's just a swipe of liquidity. So after seeing this wick here, we can take our entry. Let me check another time frames. 5. So okay, so this one here, it's very, very, very nice engulfing candle. Let's check again, the 1 hour. So we can take our entry from this point after seeing this push to the upside and set our stop loss below the low. Remember, below the low. Like we said, our next target, will be uploaded, of course. So our next target will be this high, okay? So this is our target. So after the swipe of liquidity, we are on one dollar. So I think this one. So this one is stop loss. Yeah. So this one, I think this news event. So so the same thing here. We have this engulfing candle. Let's scroll in time frames. 1 hour, 61. So yeah, this is perfect example. So do you see this one? It's our doji candle confirmation entry. So you need to take your entry from this point, set your stop loss below the low. Like you see here, we have a swipe of liquidity from previous day low. Okay, so now our target will be the previous day high. Okay, so totally from the 1 hour, you can check also the 1 hour. If you don't have premium trading view, 30 minutes, you can find other form. So if you take it from, for example, this 24 minutes will be more refined because we have here our confirmation entry. This one hits stop loss. This one hits stop loss because we have here a confirmation. We have this engulfing candle, this doji candle. Do you see this one? But and we hit stop loss after this news event. So avoid to take those trades in news event. Okay. We have already a confirmation, but no strategy in the world have 100% win rate. Okay, so this one hit our stop loss. Yeah, it's not this one. It's this one. The second one, this one. Okay. So now let's continue. We have here our confirmation. We take the trade from this point, or you can take it from this point. Will be less risk to reward. Okay. So let's continue. Let's continue. Sorry. Okay, so let's, like we said, we have our confirmation entry. We take the trade, and our target will be our previous day high. Okay, so let's see how the trade will go. Okay, so now we have a swipe of liquidity from this point. You can look for entry, but we have here New York session. We'll have Asia session. So yeah, it's a high win rate, brother. Just you need to practice on it. Okay. So the second thing, we have here our Asia session that didn't take in before, and we have here this high here that represent an old previous day high. Do you see this one? We have here Asia, London, New York. So this is the highest point into this day. So this is a previous day high. So this will be represent a point of liquidity. Okay. So now we can take a trade from this point. Of course, we can take a trade from this point, but we are in a bad timing. So you want to take the trade in London, during London session or during New York session. So we're going to avoid this point. Okay. So here we have our point of liquidity, this one, and maybe we have this. So like I said before, if we come back to our theorem or our theory, we have expansion taking external and targeting internal liquidity. So this happened in multiple time frames. Okay, so like this point, we take the external liquidity here. So during this small trend, we take this external liquidity. So we need to come back to take internal liquidity. So we have here a fair value gap. So we need to come back to take this internal liquidity. Okay, so and we have here our demand zone. So we know that price will go in a bullish move, so we're gonna avoid the previous day lows. So not every time price need to take the previous day low and the previous day high. So we'll miss some previous day lows, especially we are bullish. Yeah, time frames are confusing. So like I said, you need to scroll in time frames if you have premium. If you don't have premium, stick to the 1 hour, 13 minute, and the 15 minute. Okay. So it's the best if you have a pro trading view, because you're gonna find a different confirmations candle. Even if you scroll in different time frames, you're gonna find the same candle repeat itself. Okay. So now we need to see price come back all the way here and find a confirmation entry. Okay. So here we have a bad timing. So we have here our future liquidity, like you see here. So now let's wait. So now price At this point, tapped, take the internal liquidity, tapped into this demand. We can scroll, for example, in higher 13 minutes or 20 minutes. Let's check. Okay, so this is the best. Do you see this candle here? We have a clear candle, push it strongly to the upside. Okay, after price tapping into our demand zone. We can check other time frames like the 10-minute, okay, or the 15 minutes, 14 minutes, the 15 minutes. You can check multiple time frames. Anyway, if you stick to the higher time frame, you can take the trade from this point, okay? So let's continue. So now, at this point, we are in a bad timing. So no trade entry, okay? So we are here after New York. We're gonna get Asia session for internal liquidity, which fair value gap do you know that price will retrace to and then reverse from? So we're gonna answer about this question of internal liquidity, which fair value gap. So in the higher time frame, you don't have multiple fair value gaps. So from this point, for example, we are on the 4-hour time frames. So we identified our external liquidity, and we don't have a lot of fair value gaps. We have only this one, valid one. So we don't have a lot of fair value gaps. So it's obvious this will be our internal liquidity, okay? But in smaller time frame, like we said here in the expansion, so we have also only this one on the 30 minutes will be clear. And we have some fair value gaps below here, small one, okay? But we have our demand area just with this the valid demand area with the fair value gap. And we have this session liquidity. So probably this will be the most probable fair value gap. So in 10 minutes, I will send another link, okay, to continue. So now, like I said, we are in bad timing, so no trade. So we have our liquidity here, the previous day low, and we have the new liquidity other here, the previous day high. So you need to identify those points of liquidity every time, okay? No problem. So we're gonna wait for swipe of liquidity and then looking for trade. So the second form of liquidity, like you see here, we have Asia low. Okay, we have the swipe of Asia, the Asia high, and then take the swipe of Asia low. Okay, so our trade, the trade need to be taken at this point. So let's check higher time frames like the 1 hour and the 45. So you can take it from this doji candle. Set your entry by market execution at this point and set your stop loss at the low. Okay, so we have a swipe of liquidity. So this one here will be our future liquidity. So we're gonna talk about this later, okay? And your target will be the previous day high or the previous session high, okay? So we're gonna target this point. And like you see here, we have other points of liquidity here we can target, or you can go all the way to the internal liquidity, okay? But as our rule, don't look for a high risk to reward. So stick to this point, for example, okay? Or you can take it on the 1 hour after seeing this push to the upside, will be 3R. But the 45, this is why I told you need to scroll in different time frames, okay? This will be a 9R. It's very, very high risk to reward with higher time frame strategy, okay? So now let's move on. Okay, let's drop to the 15 to stick. Okay, so now, okay, we have a swipe of liquidity from this high and from this high. It's a previous old high, okay? So now, after this swipe of liquidity, we can find a trade to the downside, okay? And our target can be this Asia low, because we take the Asia high here at this point. So, do you see this push to the downside at the 15 minutes? Let's check the 30 minutes or the 45, the 1 hour. Okay, it's clear a swipe of liquidity after seeing this week, okay? So on the 15 minutes, we can take the trade from this point, or We can take it. Let's check the 10-minute. Okay, so we can take it from this point, because this candle and this candle, they consider as one candle. Okay, let me check different time frame. Okay, so this is our doji candle, but it's not this nice one. You can take the trade from this engulfing candle, for example, and put our stop loss above the high. So remember, you can take stop loss easily, okay? And our target could be here or this Asia low. But let's say we took this trade from the 13-minute candle, okay? And our target will be this low here, or we can go all the way to New York session previous low, okay? So we can take partial here and continue our full partial full trade here, okay? Okay, this one hits stop loss, okay? So remember, you can take stop loss easily. Okay, so here we have our confirmation. It's proper confirmation. Do you see this push to the downside? You can set your trade from this point and your stop loss above the high. Okay, so remember, you can take stop loss and then the price goes in your way. So always wait for confirmation, proper candle confirmation. Like I said, brother, scrolling in time frames give you different form of confirmation candle. We talked about the confirmation candle, doji candle or engulfing candle. So maybe in other time frame you will not see this candle. Okay, let's check, for example, the 1 hour. It's not the clearest one. Let's check, for example, the 13-minute. Let's check, for example, the 15-minute. So for example, this is the best example. On the 13-minute, your trade will be from this point. So if you targeted this, let's say this all the way to this point, you have 4R risk. You have 4R as your risk to reward. But if you check it the 15-minute, you can take it from this engulfing candle, and your risk to reward will be 6R. Okay, so this is the reason why we scroll in time frames, to find the best entry. Okay, so this is the only reason. Scrolling in time frames will give you the best entry or the more refined entry. Okay, so let's say we took it from this 15-minute and our target will be the Asia low. So this is 3R risk to reward. So ended up with hitting TP. So now price decide to all the way to take this liquidity here. Okay, so let's see. So we don't have any swipe of liquidity. We're gonna wait. So now if you notice it, we have our previous day low and it's clear relevant equal lows. So this one here, we have a clear equal lows. We have this low and this low. So it's clear equal lows. Okay, so we have two form of liquidity: the previous day low, the retail classic liquidity. So now we need to see a swipe of liquidity from those lows and then engulfing or doji candle and then push to the upside. Okay, so let me remember you, we are in small trend, in bullish small trend. So the long positions will be better than the short positions. Okay, so remember that. Okay, so let's wait for a swipe of liquidity. We're gonna take this trade and then we're gonna close this call and send the link again. You can join again. Okay, so we have the swipe of liquidity. We have the Asia low also taken out. So let's check the higher time frame, our higher time frame. Nothing on the 1 hour. So we talked about the SFP, the swing failure pattern. We have an old low and price broke through it and closed above. So it's so simple. You can take the trade from this point after seeing this strong wick and put your stop loss at the low. So this will be, and your target, like we see the previous day high, this will be a 10R. But to be in the safe part, you can take it from this engulfing candle and your stop loss seated here. If you notice it, that the price after swiping of liquidity push strongly to the different in the reverse or the different or the opposite direction. So guys, we're gonna send the link again and we're gonna continue Okay, so we're gonna close this call. See you in the part 2 of this call.